Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options. FX options are a low-risk alternative to hedging currency moves in any market condition.
Now, again, compare that. Now, let's go over to the EUU, by the way. I'm looking at the EUR. You see that the EUU looks just like that Euro-US dollar pair we're looking at as a Forex trader. All right? And as compared to the EUI, let me show you that real quick. I trade the EUI, that's fine, it's just kind of inverse, right? But I find it more comfortable for me to not have to think, long in one market or long in one market, but puts, that kind of thing. So to me, the EUR, USD, and then the EUU make more sense. And again, here we have that resistance at 140. Okay, so certainly you can look for put options up in this area as we're looking at right now today. Okay, but as we start approaching 138, 137.80, the support of this uptrend, I might transition that strategy to going ahead and taking my put, go ahead and liquidating that put, and then looking again, once again, at purchasing a call. Okay? Again, trend following. Any questions? And I hope there
is a question, but it has to do with more of a fundamental analysis. And
okay.
It's John asking. He says, he realizes that you're bullish on the yen, but he says, why is this happening? Because it seems like we have a guaranteed carry trade, and why is the yen rallying even though the interest rates are zero in Japan? Does that make sense to you? Obviously, it does to the market.
Well, I think, look, it's very interesting when it comes to carry trades for me because I have a different take on the carry, and obviously and John, you're absolutely right. I mean, with that interest rate differential, and you look at the Aussie yen, or you look at any of these countries that have the high interest rate versus the low interest rate, and you're right from that perspective. I don't know that the carry trade necessarily went anywhere, but the carry trade works best either within the context of the trend where you're able to just follow the trend. So, for example, if you guys are looking at the Aussie yen, you know that you're trying to take advantage of selling or borrowing yen to fund the purchase of this higher yielding asset, which is the Aussie dollar with its higher interest rate. Okay? But the problem with that is the word carry trade to me, and I'm going to just get very basic with this, the word carry trade, you certainly want to take advantage of the carry, without a doubt. But within that, there's also the trade. We can't ignore the fact that directionally we can be very hurt in our positions beyond the benefit of the interest rate return, okay, if we're on the wrong side of the trade. So to me, and again, this is just the way I've always been. I'm not a big fan of the carry. Carry is simply something that's either going to be a cost of my trade, or I'm going to be able to benefit from it, but I don't get into a trade purely for the carry unless there is an underlying trade that makes sense based upon the directional bias of the market. So, with traders buying yen right now, okay, with the yen strengthening, that does not help the carry's case whatsoever. So, you think about your position, for example, in daddy of carry trades, the Aussie yen. This is not a good day. So it depends upon how much carry are you willing to, obviously you're making their interest rate, but what point are you, willing to, at what point are you on the wrong side of the trade itself? Does that make sense, John? But you're right. As long as the yen's cheap, that carry is viable, but at what point are you, going to look back and say, well, the currency itself, though, doesn't seem to be justifying my directional, you are in a trade, so direction does matter, right? So at what point doesn't it make sense? So, I might be the wrong person to even answer that question because I don't like taking advantage of that as the main reason to get into a trade. To me, it's the gravy. You know, I'm in it for the meat and potatoes, but carry certainly is some tasty gravy if it's on your side.
Right, Becky, if you don't mind me interjecting, from a
Sure.
securities trader standpoint, I agree with you, because if you think about, you don't buy stocks solely based on whether you're a fundamental analyst or you're a technical analyst. You don't buy them just based on the dividend yield. You look at the high dividend yield, you better start to look to see if they can pay that dividend forever, or you don't, if you're a technician, you're just more concerned with the trend, as you said. Looking at just the carry itself only gives you a small picture of the whole investment itself.
Yeah, that you put it perfectly, Steve. That's a great, that dividend analogy is exactly it. Absolutely. So, but thank you for that question, John. And again, I certainly don't disagree with you, but I think that, to me, it's just a very small part of the trade. And one thing you bring up a great point is, what if you're on the other side of the carry? You're paying it. A lot of traders don't consider that enough as a cost of the trade. There is a cost of the trade. It's not just, if you're in the spot world, there's a cost per trade in that regard. But, for me, my whole hypothesis for the yen strengthening, again, I kind of went through all that, so I won't rehash it, but, is based upon that expectation of, again, the Dow being a factor, the dollar being a factor, and then, again, the earthquake basically hitting the accelerator on the fact that I felt that we're going to get a breakdown from the consolidation.
Right, so what would change your mind? I mean, this is just me asking. What if the Bank of Japan said, you know what, we're going to flood the system with yen because obviously we have significant problems. We're going to almost do quantitative easing like they've done in the United States. They haven't done it in decades, so that's been their problem. But what if they actually came up with something that the markets thought was credible? What would you'd see it in the charts? Is that what you would? Is that what you'd be looking for? Sort of a massive move back up in U.S. dollar against yen?
I think it would last all of about a day or two, because I think they've tried that.
All right.
Oh, I mean, we've seen the way the foreign exchange just swallows up these
Right.
intervention attempts, whether it was the Swiss franc. I mean, how many times have the Swiss tried
Right.
to blow up? I think the franc is a great example. So if we head on over to take a look at that chart, so if you head back on, for everyone watching, if you head back on over to ISE.FXoptions.com, you'll see there's the SF. Okay, so that's a great point, Steve. But I think how many times have the Swiss try to do that? Whether it's
You're right.
just
Yeah, you're right.
by just kind of a rumor, or whether they actually attempted it, it just didn't end up well for them. So going back to the YUK, I think it would last a day or two. The market up maybe back up to 83, and then I think the pair is going to do exactly what it was doing beforehand.
Right.
Because it doesn't change.
Some of your favorites are yen strength still and potentially Australian weakness. We haven't seen it yet, although we start seeing a little bit today, correct?
I'm anticipating more Australian weakness because I don't think we've reached any kind of significant support or floor. But the yen,
Right.
I'm thinking the closer we get to 80, the closer we get down to 80.33, we might start building support once again. So I really need to make sure that I don't have expectations that are forgetting that we've had support in this area before at 80.33 to 80.50. As far as the Aussie goes, though, I think we have more room for that downside. So I'm actually a little bit more as far as forward to potential downside on the Aussie. And also let's not forget that the Aussie headed down today. That if you take a look at gold, and you look at the XAU USD, or you just go right to gold futures, gold has had a rough day. So,
Right.
Aussie, not just that. Look at also at crude. You at the CL contract. This Aussie and Comdol, and look at crude. We dipped below $100 a barrel, down $3.50 today. So
looking at, remember when we
all
started,
that
I'm sorry.
I'm sorry.
When we started the session, we talked a little bit, just you and I, about the implied volatility of yen and Australian dollar being about the same. Do you actually think there's more power, more potential velocity on the Aussie relative to the yen?
I feel that the yen could be running into support pretty soon.
Right.
And if that's the case, I'll continue to be a bear at a time where I could be looking at a floor. I just don't think that's necessarily a nearer-term floor. A lot of what's going to happen in the Aussie is tomorrow's follow-through on gold or tomorrow's follow-through on crude. If we want to see another leg down on that Aussie, we really need crude to stay below 100. We really need gold to continue to stay weak as well. So a lot of ifs there, but yes, I think there's probably more downside on the Aussie.
All trading is contingency, so that's great stuff. Thank you.
Oh, thank you. So, those are basically three of my key, positions, three of my key strategies right now that I'm executing in the market right now. Two of them were sideways market strategies. One of them is a trending strategy. Exactly what I talked about on the EUU. You could also look to possibly execute on the Swissy, the Swiss franc. Those are really where my head's at. I think that's where we're going to be looking at a lot of volatility in the next few weeks, and I'm looking at options, and I was even 3-4 months ago right now, because there's positions that I want to take. But with the kind of volatility we're seeing, I don't want to tie up my margin or expose myself in a way that I can't manage the risk. And this is where, in this environment, we may not be dealing with the trends we were once dealing with, but we're dealing with transitions in trends, which, again, while the psychology may be more difficult to put your finger on, I think options are even more well-suited to manage the risk of this environment.
I agree.
So that's pretty much my presentation for today, gang. I want to give you
a moment. We're at the top of the hour. I want to give you a moment for any closing comments.
Sure. Thank you. So, really what I would love to encourage everybody to do is, first of all, find those speakers here on the archives, the ISC, that are speaking your language, and find a way to take advantage of the power of the options. This is not about just talking about the currency market, the currency pair market. It's more about understanding the psychology of what these symbols are telling us and asking yourself whether or not an option would be a better way to manage, to handle, to profit from the psychology that we're seeing. And that's really what I hope to impress upon you, or hope I did for the past hour. So thank you very much for your time and your attention. I sincerely appreciate it, and big thanks to the ISC and especially Steve for letting me come by again today.
Reggie, I do have one other question. If we have a lot of attendees, and I've gotten some great comments, if somebody wants to contact you, is it best on Twitter? What's the best way to learn more about the books that you've written or any other services that you might have?
Well, the easiest way, and I'm not really doing much by way of services any longer, but probably the best to take advantage of would either be to visit me at rogihorner.com, which is my personal blog. Again, I'm the Chief Currency Strategist over at Interbank FX. And absolutely, like me, like everybody else, I'm on Twitter, and I'm on Facebook, and on Twitter, my Twitter name is simply Rogi Horner. So feel free, absolutely, to follow me there as well, and you can get updates on what I'm doing there, and see what my trading situation, strategies, thinking is all about.
Rogi, thank you, and can't wait to see what happens in the next couple of days. Really loved your insight on the yen and the Australian, two of the most timely of the pairs, so thank you so much.
Thanks a bunch for having me, Steve. And everyone, thank you so much. And hopefully I'll see you out there in the on the web, and hopefully you'll think about how you can incorporate these tools and take better advantage of some of these moves we're getting in a way that, again, can really be a much more manageable risk. Because, gang, this is going to be a wild ride I think we're going to see for the remainder of the year. And I can't think of a better time to really start looking at what's happening on the options front and taking advantage of that volatility.
Thank you, Reggie. We'll have to schedule another event. You're always so popular, so let's try to figure something out in May or June. But thanks so much, and I'll be in touch.
Sounds great, my friend. Everyone, take care.
Take care. That was Reggie Horner. And again, if you'd like to contact Reggie Horner, you could get Reggie at twitter.com/Reggie Horner, or you can go up to ibfx.com. She's very popular. And again, RaggieHorner.com is another great place. So please go seek out Reggie. Follow her. As the couple of the ideas, the insights that she gave us today, you'll be able to follow what she's doing over the next couple of days, weeks, and even months. And hopefully she'll be back at the ISC real soon. Just want to, you're seeing on slide 4 one of the skew charts. You can get this. These are always free. So you're looking at the dollar-yen, and you can look at the high volatility of the very short-dated option as denoted by the red. And we can go through all of them very quickly. We have the Canadian dollar, we have the euro, we have the Australian dollar, British pound, and the symbols are always right there, fxoptions.com. I want to thank Reggie Horner. Reggie, you did a great job. If you're still there, thanks so much. Looks like we lost it, but Reggie was wonderful today. She is the chief currency analyst for the Interbank FX, and she does give her daily insight tips through www.ibfx.com. So please join her there. Next week, Jack Brooks will be back with us. Jack hasn't been with us a number of months, so he'll be back. Price Heedley the following week, Jason Ayers, and Jeff Gibby. So those will be the next 4. And if you're interested, we at the IAC will be hosting another webinar in just 24 minutes, where we'll be talking about Patrick Seresta. We'll be talking about ETF options, how you can spread ETF options. On behalf of the IAC, I want to thank Reggie Horner. I want to thank all of you, the attendees, for making this event so great. Thanks for joining us. And keep your eyes on the IAC FX options. Lots of opportunities out there. Just, again, go to fxoptions.com. Open an account through your broker. If you have an equity options broker, you're all set. And then just learn the strategy, and then you can implement it. So, again, thank you so much. On behalf of the IAC, it's Steve Meisinger. Wish you a safe and happy trading day tomorrow. Don't forget to join us at the ETF webinar in just 25 minutes. You can sign up at the IAC site, www.isc.com. Thanks, everyone. Bye now.
Thank you for participating in this week's session. Please join us again next week. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.